Michael, it's great to have you, and this has been just an absolute outperformer going back 2 or 3 years now. So this would be a big deal if these stocks, and I don't, maybe you can catch me up to speed if they've already stalled out a little bit the past few weeks or months.
Yeah, thanks for having me, Kelly. The stocks have acted a little more softly in the last month or two, with rates retracing upwards a little bit. But our concern is really, in contrast to the last couple of years, particularly as we've seen rates move up during the latter half or the latter quarter of the last 2 years. What we see different this time around is inventory levels are much higher than they have been. On a national level, it's interesting, existing homes for sale remain fairly tight, but more than half of the 23 major markets that we track have now inventory levels of existing homes at or above, around or above normalized levels.
Interesting.
And so that's really, I think, the big difference. Normally, when rates stabilize, if they were to stabilize again this year or into next year, we would view that as a positive. But with demand drivers remaining more, we think, unchanged going into next year, and supply much higher than the last couple of years, that's some of the challenges that we see facing the industry.
So specifically, I thought it was interesting. You have Horton underweight, Toll, and I think Meritage are neutral. Why do these, Horton in particular, you think face particular challenges?
Yeah. So, the way we approach our stock selection remains more or less unchanged over the last few years. And it doesn't have as much to do with specific positioning for D.R. Horton. We think it's actually one of the better managed builders, national in scope. It's also shifted towards more share repurchase and returning capital to shareholders, which we think is a positive. The bigger driver of the underweight is more on a relative basis. We take a portfolio approach to the stocks and look at relative valuation versus relative fundamentals and see which names versus their peers are better positioned to outperform or underperform. For D.R. Horton, the stock is trading at a roughly 10% premium on a PE basis and roughly in line on a price to book, despite our outlook for below average margins and returns over the next couple of years. And so that relative valuation doesn't sit as well with us as it had in the past year.
I believe I heard you say earlier that in certain selected markets, or maybe half of the markets you follow, I forget your exact phrasing, the inventory picture has kind of normalized. What is driving that? What's changed?
Yeah, so, it's a great question. I don't know if there are great answers there because existing home turnover remains fairly depressed. And so typically you would see maybe a little bit of a positive coincidence. I think it's a combination, frankly, of the higher home prices that we've seen over the last 2 or 3 years. In many markets, it's been very strong. Some of the most elevated markets, like in Austin, Texas, had outsized home price appreciation in the prior few years. And I think that just encouraged a lot of people to put their homes on the market.
Yeah, that's bringing people out of the woods and into the open, in other words.
Right.